What's going on, everyone? I want to cover some of today's price action because today was a little funny. Although it looks like there was some really clear opportunities to make some cash. Again, if you had a tight stop loss or you were expecting the move to run 20 points just immediately after you got in, it kind of puts you in a little bit of a blender where maybe you took some drawdown and exited early, maybe you didn't make as much as you thought you were going to make. But if I can switch your mindset to these base hits, right? Simple base hits. I believe in trading micros, especially if you're trading a funded account. Now, if you're trading a valuation, you can definitely bump that up, mini or two minis. But let's just speak as if we were trading funded accounts, right? Because I trade funded accounts. I like to, assess everything as realistic as possible. And for the better half of 2 weeks, I've been explaining to a lot of traders that are inside my community at Evolution Traders that, I'm looking for 5 to 6 points right now on a take profit. Now, you may sit back and you may start to think, that's not a lot, right? Like one loss, you're going to give everything back and, you're just never going to recover. That's simply not the case because when you look at the NASDAQ and you look at the range of the NASDAQ, obtaining 5, 6, 7 points is a lot easier and happens more frequent than 20, 25, 35, 45 point moves. Those moves definitely do happen, but generally speaking, you got to give yourself more time in the trade and you definitely have to open up your stop loss a little bit. And God forbid that the market starts to chop around a little bit and consolidate, you can definitely take a bigger hit than what's needed to, than to go at this with an approach of, if I just focus on a few trades a day, and I would say limit those trades between 3 and 5 trades a day. If you can get away with trading less, definitely trade less. But if you look at that situation and you try to take 5 or 6 points and you follow an outline, a blueprint, inside of my community, I offer a course where it goes over all the strategies, all the levels, all the different indicators that I'm using. So if you want to join, that link's in the description. But let's just go over the 20 SMA play. Okay, so what I'm looking for is short-term changes in momentum over under the 20 SMA. I'm waiting for a confirmation, which for me is the closure underneath the 20 SMA, and then I'm waiting for a entry point. And the entry point's typically going to be on a following candle. And I like to run this off of a 5-minute time frame because it provides me enough range, enough average true range where I can pick up 5, 6, 7 points very, very quickly. And I don't have to stress that much. And I definitely recommend on a funded account, if you stick to trading less than 5 micros, yeah, maybe some trades you're going to make 35 bucks. Maybe some trades you're going to make $60. But if you sit there and you take a couple of trades and you get the hang of things and you start incorporating other levels that you can play, you can definitely turn those 40, 50, $60 trades into a $200, $300, $400 day. So the first trade of the day literally happens right off the open. Big flush right off the open here. You see a quick spike over the pre-market highs and then a big flush down and below the 20 SMA and that test VWAP. The next candle opens up and it does wick down and immediately spikes back up. Now, looking at this in hindsight, you're going to tell yourself, man, I would have taken such a big loss, And again, if you were trading too much size and you were looking for too many points and you're not content with just knocking out small base hits, I definitely see how someone could have been sitting through 30, 35 points of drawdown. But if you get into this and you have a hard take profit of 5 points, 6 points, 7 points, look at the entry point on this. You would have been getting in this trade below 23,020, okay? And this shoots down to 23,012. So that's 8 points. Let's call it 7.5 points. So if you were looking for 5 points, immediately we're going to get filled. If you're looking for 6 points, immediately we're going to get filled. Now, if you're looking for 7, 8, 9, 10 points, there might be some room for some slippage there where maybe you didn't get tagged on that and you would have had to sit through some drawdown. But realistically speaking, it never closed back over the 20 SMA. So pressure was still down. So you might have gotten trapped in a little bit of drawdown, but you would have been able to ride that out and take some profits. Now the next trade was here, same kind of area. This is just nothing more than a dead cat bounce, a little bit more of a riskier trade because the momentum was down and we already had such a great bounce off of the daily 5. I would have definitely recommended to get in down here off this consolidation of the daily 5 SMA. But let's just talk about the 20 SMA. So in this particular trade, 23,026 was the high. That would be your entry point, and the next candle opens up and spikes to 23,033, another 5 points. So now you're 2 trades into the day, you're 10 points in the positive, and again, if you're trading 5 micros, you're looking at $60, $80, $100 in profits, depending on slippage, depending on some fees, depending on whatever. But let's just call it around $80 to $100, right? The next trade here happens at 7:50 Pacific Standard Time. This candle here, a little bit tricky, right? Because it's backtesting the daily 5. You can see here the low price was 22,967. It shoots down to 960, another 7 points. Are you starting to catch the drift here? How 5, 6 points happens, and happens very frequently, and happens very consistently. Now, again, does every day work out this way? No. And also, does every day barely go down and then shoot back up? No, there's some days where these trades confirm and they run for 50, 60 points. Now, look at the trade to the upside. High price was at 23,026. Confirms here. It does pull back a little bit, about 10 to 12 points, and then starts to ramp up another 5 points. So now you're clearly 5, 10, 15, 20 points in the green, and now you've taken about 2, 3, maybe even 4 trades. You can start to think about walking away, especially if you've been logging in, $40 to $50 trades. This is about $150 to $200 day, which is sufficient enough for most prop firms to walk away and count this as a winning trade day. Here's a big news candle here that we had. It's a 100-point candle, washes out, loses the daily 5 SMA, confirms. I don't even need to do the math for you. You can see would have picked up another 5 points. So all in all, sticking to the strategy, not getting too concerned when it doesn't, go 50 points in your favor right after entry. Start looking for those smaller take profits. Start sitting through a little bit of the drawdown as long as technically the trade is still valid, and start to make some cash and walk away. I hope you guys enjoyed this video. If you guys want to try this strategy out with Apex, right now it's 80% off. You can use my discount code DAnthony. If you guys want to trade with myself and the rest of the team inside of Evolution Traders, get access to the courses, get access to the daily recaps and the different educational material that I offer there that's not on YouTube. That link is also in the description box below. I will see all of you guys in the next video.